Hey guys, welcome to the channel, The Blackjack Trading. I hope you're all doing well. Today, what we are going to do, we are going to trade on the news itself. So, in the today's market, as you can see, exactly at 11:30 a.m., the GBP GDP is going to be released in the market. Okay, so GBP in the Britain pound, the GDP data is going to be released. The GDP data is highly important because it has a lot of volatility in the market. And since we will be trading today live on Zoom call, you will be seeing a lot of profits or losses that is going to happen. So let's see what is going to happen. So first of all, let's do the fundamental analysis of the GDP. Since GDP is good for economy, that means if you will see the forecast over here, it's 0.2%. If the actual figure is upside, then you will see the GBP USD going upside. And if it is going downside, then you will see the GBP USD going towards the downside. It's very simple. You have to understand that there is a direct correlation between the two. If you will go to the technical analysis over here, so let's come to the chart and we will be doing the technical analysis over here, and we will be seeing how the price has been moving in the past and how the price will move in the future. So let's analyze over here. First, what we will do, we will understand that the London session, the Asian session started around this level, which is over here. So once the Asian session started today, what you will see around over here, we have to understand since the 11:30 a.m. the London session is going to be started in the market. So and exactly at 11:30 a.m. only you can see that the news is going to be released. Okay, so it is very important because we don't have the data for the London session. We have to understand the thickness of the previous two sessions. So this was the Asian session, and you can see that the previous from 7 p.m. onwards, this is the New York session. So in the New York session, the price went upside. In the in the Asian session, the price went upside. Okay, so what does it say? It says that the high probability is that the third session can be a reversal. Okay, third session has a high probability of reversal. That means the price has the potential to go towards the downside. Now let's analyze the market structure or the direction of the market, how the price is behaving in the past, and how can we take the trade in the future. So let's try to mark the major breakout. This was one of the major breakout, after which you will see that there was another breakout from here till over here. So market is moving something like this. Price is creating a higher low, higher high, a higher low, and a higher high again. And from here, what did happen? Let's mark the major breakouts over here. So this was another major breakout. It's very simple, guys. You have to understand which is the major resistance while the price is going upside and mark those levels. So another time you will see that the price created a higher low, a higher high, a higher low, a higher high, a higher low, another higher high, another higher low, another higher high. Okay, so like this the price has been moving. So let's mark the major breakouts over here like this, and another one over here. And then over here, what did happen? The price actually sweep this level. This is a major sweep over here, or liquidity hunt over here, because of which price took out the upside liquidity and then targeted for the downside liquidity in the market. So price did what? Price created a lower low. However, the price regained its momentum and creating a new higher high in the market. So this is the major momentum. You can see this was the last breakout structure, and from here the major resistance was created over here. So this means this will be regarded as a breakout structure of us. So this is the breakout structure, and this will be regarded as a chalk in the market. This will be regarded as a change of character. Now coming to the next point, what is happening over here? So we will see what is happening over here. So price was going downside. As you can see, the now external structure is moving upside. We have to look, if we want to take a buy or a sell, we have to look for this internal structure. Now we have to study this internal structure. So we are doing multiple time frame analysis and within the same time frame itself. So from here, what we can see in the market is the market moves something like this. Internally, the price first created a support, went up, then created another downside, created upside, then again downside. So first the price consolidated towards high and lows, and then finally what did happen? Market started creating major lows and major highs. So from here, price created another support which was sweep. So this support will be transferred over here. The price went towards the upside, something like this, and another time the price went down like this. So this was another breakout, or will be regarded as an internal chalk in the market or internal breakout structure in the market. Finally, from here, the price created another support level, created downside momentum like this, another lower high and lower low. And then finally, what did happen? The price created a breakout towards the upside, or you can say given chalk in the market. And also right now, the price is also, you can say broken out this major level over here. So what is happening? Another time, the price created a higher high and the price created a lower low. So majorly what we can see over here is normally in the momentum trading, what has happened that we take what we usually do, what we usually understand where the price is trying to go in the major structure. Okay, so major structure is upside. However, if you will see over here, what is happening over here, the price first created a higher high and then created a sudden lower low in the market. That means the price is already, you can say, taken out the external, buy side liquidity, and now the price will try to take out the downside liquidity in the market. That means the price will target the downside liquidity over here. Okay, so let's see if the price creates a buy leg over here. Okay, now since only 1 minute is left, let's see how much time is left. 2 minutes and a half minutes are left. As you can see that the timer is running over here. So those who have not joined the Zoom call, please guys join the Zoom call. Okay, so you can join the Zoom call. I have given the link in the description, and you can move forward and you can join join our Zoom calls on regular. Moreover, for educational purposes, you can subscribe to our channel. I am actually uploading a lot of videos regarding the SMC concepts and how you can track the market, and we have made good profits in the past times as well. So coming back to over here, so price is trying to again doing what? Price is not created. Basically, prices we have to look whether the price is created the buy leg or not. So once the price is created, if you look, the price has created a good support over here. Okay, the price has really created a good support over here. This is another, you can say, regarded as a breakout structure or the internal boss, because the external boss is on the upside. This is the internal boss. Okay, and now what we are looking for, we are looking whether the price will now create a sell leg, because the major last time you will see that the price has done what? The price has created this major lower low, and then the price is trying to create a lower high, and after that, if the price continues the momentum, then what will happen? The price will create a lower low. Now what did happen? As you can see, the price suddenly created a spike, creating a buy leg in the market. So what is pending over here? Now after every buy leg, there is a sell leg in the market. So in the news itself, what we are looking for, we are looking for a selling opportunity, something like this. Okay, and we are going to put the stop loss above this level, somewhere over here, and then we are going to target towards the downside. So this is the new trade that we are going to looking for trade. So let's put up the trade. We are going to go with 0.3 and 0.4 lots over here. As you can see, 0.04 lots over here I have put up. We'll be putting the stop loss somewhere around over here and targeting towards the downside. So the target will be somewhere on the downside towards the this low, this major low over here. Now let's see if we get this target or not, or if the price suddenly shows up or down. So let's see. We will place the trade. Since 24 seconds are left, we will wait for another 10 seconds, and then we are going to place the trade in the market. So we'll be placing the trade over here and putting the stop loss. Okay, guys. So I placed the trade. As you can see, we have placed the trade over here. 5, 4, 3, 2, 1. Let's see. Okay, so price has little bit gone up, and you can see we have not lost much, because even if the price has gone up, we have not at all lost any of the money. That means you have to look for the proper risk reward. So if I was right, then the price would have got me $8. However, if I'm wrong, the price has just taken out the Asian high in the market. So this is another breaker structure as well as the Asian high. So let's see, the GBP would have been positive in the market. If you look at the pending figures, the GBP is positive. The forecast was 0.2%, and the price gave us 0.4% in the market, and that's why the price went up. However, technically, if you will look over here, the price again consolidated and confused a little bit. As you can see that the price first created a higher high, and the last leg was a lower, and then finally market suddenly put up a spike, targeting towards the Asian high in the market. So this is what has been done over here. In today's was the new trade of the GBP. If you will look, that the next trade is tomorrow, CPI trade. We are going to go live with the CPI trade over here. So do not forget to subscribe to the channel, the Blackjack Trading, and we are going to do a lot of fun over here. Okay, we are literally going to do a lot of fun over here, and we are going to make it a bigger day. So CPI and PPI, both days will be very highly volatile. Even if you're an intraday trader, try to trade both of these days, because the market will be highly volatile in the London and the New York session. Moreover in the New York session, because this is the USD news. So CPI and the PPI, the consumer price inflation index and the production price inflation index, are both equally important in the market. Okay, guys. See you in the next video. If you have any kind of queries in the market, I have put my WhatsApp number in the description as well. You can connect to me anytime you want. Okay, guys. Till then, take care. See you in the next video.